Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do. And so we begin. Today is Monday, February 26, 2024. There is not a whole lot of major economic news coming out today, tomorrow, or really Wednesday. Not the most interesting data, but we do have a PCE index coming out on Thursday, and so we could see some action happening Thursday. Before then, we don't need to necessarily expect very much action in markets. The next chart I just wanted to bring up was the CME group Fed Watch tool for the probabilities of rate cuts. We're currently at this level, the 525 to 550, and when the probability is higher at this max 525 level, this is the target, front end of the curve from the Federal Reserve. It's how high interest rates are guaranteed at the Fed funds rate. And I just wanted to point out, I feel like some people have confusion over how these numbers work. I think it's important to realize that when you see a number like 53% of hike, a chance of a cut to a max rate of 525 in June, it's not actually almost 34%. It's 34% plus this 7%. Plus this, you have to add up, because take into consideration that when there is a 7% chance of cutting even further, that's added to the chance that there is a single cut. And so when we see 53%, we should really be thinking a little bit over 60%. I just wanted to point that out. I only mention it because I see other people with much more experience than me seeming to not really fully comprehend that little fact there. So I just wanted to mention it. Not a whole lot of other super interesting things going on in markets. This is HYT, one of my favorite indicators for short-term movement in stocks. This is high yield corporate. Sorry, you can't even see the name of the chart here. The BlackRock high yield fund, high yield corporate bonds, and I think they have some preferred shares. Anyway, this is the risky side of smart money. These are bonds. These are risky bonds, and how much risk there is of default. That's how this gets priced. And so when you see a breakdown of this, it just adds a little bit of risk to the market, and we saw a little bit of that today. We had for about a week had been consolidating into this area, and this looks like a breakdown, and so we could be seeing further weakness coming momentarily. In the meantime, taking a look at ARK-K, where it's more controlled by the dumbest money on the planet. We had a spike up today. I mean, granted, this is probably largely having to do with the fact that Bitcoin is also rallying today. That's the other notable thing going on in markets. Moving on, I just wanted to mention one stock that has been catching my eye lately, Sylvian Stillwater. If you take a look at just the cash that this company has, it's compared to its liabilities and its ability to earn money over the past 10 years. This is one of these Graham stocks that I think is a once in a lifetime opportunity. Again, no investment advice, but I just wanted to bring up this stock here. You can look into the metrics yourself if you're interested, but this thing looks absolutely dirt cheap to me, and I scooped some up today. Now moving on to the headline, the title of this video, talking about Jamie Dimon. I have some quotes from him from CNBC today. He's talking about AI and basically making arguments against the idea that we are in an AI bubble. And he mentions, and I quote, "This is not hype, this is real. When we had the internet bubble for the first time around, That was hype. This is not hype, it's real, Dimon said. And then he goes on, it may invent cancer cures because it can do things that the human mind simply cannot do, Dimon said. And then the last thing I want to mention is that, just a few days ago it was in the news that Jamie Dimon had sold $150 million of JP Morgan shares, which is a rare, first time for him kind of an event. And so I don't really know what he's saying here or what his real motivations are. It doesn't seem like he's necessarily putting his money where his mouth is. I mean, is he selling JP Morgan shares to buy AI stocks? I have my doubts about that, first of all. No matter what his motivations are, I think this is complete falsehood. Um, you, you know, One of the important things I think to really understand about AI is the accessibility of it and the fact that there's, you know, a lot of companies that can do it and reproduce it. And, AI itself is not exclusive to one company. And the amount of competition, I think, will actually end up, we're not going to be seeing, I don't think it's going to equate the values of companies going skyrocketing higher, simply because the competition will balance out the field. And, it's really important to understand the dynamic that when there's a lot of competition in a space, the amount that companies can earn from whatever that thing is limited by how much, different companies are able to price it at. I am not going to pay $5,000 a year for access to AI tools. I already have it for free. Okay, yes, the output of amount of value is going to be skyrocketing, but is that going to equal loads of profits for companies? And I have my extreme doubts about that situation. And I think that it is not unreasonable at all to be seeing AI hype as a bubble at this moment. AI companies, including semiconductor companies, are not proving they can earn the amount of money that they are priced at. There's a load of speculative value in this area, and maybe the earnings can double, triple, quadruple from here. Maybe they can, and maybe they can't. And what happens when they start contracting? What happens when we see more competition and we see the earnings shrink, when it's already priced in that these companies are supposed to double their earnings every year for the next 10 years? It doesn't add up. That's all I have for you today. I hope you enjoyed the show. Thank you very much for watching, and I'll see you next time. Robschild.